Hey, everybody. Andy here. Welcome back to Agent Insider. Today, I have a guest with me, Hendor Rodriguez. Hendor, thanks for joining me. Hendor is a lender and a mortgage broker, so wanted to just take some time and go over the mortgage industry, what's going on in mortgages, and what things, some tips and tricks that people could be aware of for getting started if this is their first time, or maybe if they're upgrading or downsizing. Some things for them to be aware of. So I need to drink more coffee this morning. Hendor, so thanks for taking time out of your day to join me here this morning. Real quick, let's start with where people could find you, and then let's talk about first-time home buyers.
Sure. So I'm a loan officer with Movement Mortgage. Okay. And I have an office here located in Linden, Washington. I always joke around and tell people I think I'm the first Cuban ever to have an office location in this Dutch community. So I'm very proud of that.
Yeah, that's awesome.
And I'm also very proud of the fact that I was the first Hispanic loan officer in Whatcom County, too.
Really?
Yeah, I've been in the industry now. It's going to be my 21st year this April.
That's awesome. Congratulations.
And
so you were the first Hispanic loan officer in the entire county?
In Whatcom County. That is correct.
That's crazy.
That is correct. That's correct. Yeah. Yeah. It was a very tight, it's still a very tight knit type of business.
Yeah.
And to break through it took a while. It's taken years.
Yeah. 21 years you've been in it. So what has been, we can sidestep, like kind of just talk about your journey into it a little bit. What was your biggest challenge getting into the mortgage industry?
It's really, it's building, it's all based on relationships, you know, because it's a business, and every month you start off with zero. It's a commission only business. So we really are dependent upon having relationships with other indivials.
It sounds like it's a hard uphill battle. Why did you choose to go into mortgages then?
Well, it was really interesting. I was working as a personal banker, and I would see this mortgage loan officer come into the branch, and I would have to post the interest rates up, daily rates. And I looked at him, and he always was smiling. So I said, and I have a feeling this guy earns some pretty good income. So I said, I think I'm going to be a loan officer. That's going to be my next transition. I had no idea I'd be doing this now for over 20 years. And it's definitely been a journey of helping literally thousands of families be able to get homes down, and not only changing the families, but also changing their financial legacy,
right?
Yeah, their future, and
right, because a lot of people don't think about it, but buying a home, not only is it like creating stability in your family, but it is creating wealth in your family. It completely changes. I think about it as like you can rent, and sometimes you can rent for slightly less than you could buy, but you're just throwing your money away. At the end of 5 years, you have nothing, zero to show for the rent that you paid. Versus if you're buying, even if the market doesn't go crazy and you don't see a 20% jump in the value of your house, you still have equity that you were building by paying yourself through your monthly mortgage.
Yeah, what I tell clients is that a mortgage is not debt. A mortgage is actually like a savings account. Every time you make a payment, you're building equity.
Right.
Whereas, let's say if you buy a new vehicle, once you drive it off the parking lot, you've already lost equity.
Right.
Statistically, with the market, home values especially, home values and the impact of how much equity is developing really depends on location. Okay? There's a huge difference between Bellingham, Washington, or Linden, Washington, and let's say Topeka, Kansas, right? There's going to be a huge difference in how much equity is building. And we've been very fortunate, even when we went through the mortgage meltdown in 2008, 2009, that we still kept pretty steady at a pace. So our values have gradually, increased here. So it's a great investment. And I teach homebuyer classes. I've been teaching homebuyer classes now for many, many years. And, I tell the students that attend the class, I said, you don't need to have a bachelor's degree or an MBA to start building a real estate portfolio. You just need to take the risk to purchase the home.
Yeah.
In order to start building that equity, so then you're going to change, your family and your legacy.
I think a lot of people are afraid of that risk too, right? Like there is
of course.
A fear of like, man, my goodness, like this is the biggest loan, biggest debt I've ever taken on before. You start to sweat a little bit, like, is this the right thing to do? But without that risk, just in general, right? Like any business, any investment has to have risk. And if you don't take risk, you never have the opportunity to grow.
That's, you hit it right on, Andy. I always encourage them also, yes, you could start off with a 30-year mortgage, but you don't want to stay on that pace. You want to pay it off as soon as possible. If people just add one payment towards their principal per year, they shave off 5 years off their mortgage.
Wow. That's a big deal.
Yeah, just one payment. So I encourage clients, when you get your tax refund, as soon as you get it, do a principal reduction payment on your mortgage statement.
Yeah, that saves you a lot of interest when you think about that. For 5 years of payments is a significant amount of money.
Yeah.
So the home buyer class that you teach, why should somebody take a home buyer class?
Well, what more and more people are starting to do, rather than what they used to do. In the past, people would just find first a realtor and start searching for a home. And then afterwards, like, well, I guess I have to get pre-approved. Well, what's happening now is I've been seeing a different trend. And the trend has been people are actually trying to get their ducks in order beforehand.
Right.
So that's what the class offers. The class offers the opportunity for individuals to be able to get the right information to be able to move ahead and proceed in purchasing a home. And the class that I teach is with the Washington State Housing Finance Commission. I'm a commission trained loan officer with them. And with that class, they provide you a down payment assistance. And it's not a grant, it's a second mortgage, but it's a down payment assistance program, which is not just for first-time home buyers. It could be a second-time, third-time home buyer to use the program. I mean, literally, you can use a program repeatedly over again. And there's a way to do that. And you have to attend the class, and I'll teach you how to do that. Especially the down payment assistance section of it, which is 4% of the loan amount, which comes out to about 3.88% of the purchase price. That's at 0% interest for the down payment amount.
So you can take this. You take the home buyer class.
Yes.
You have an assistance program through
the Washington
State
Housing Finance
through Washington State, and it will give you a loan, not a grant, because I'm going to pay it back.
Yes.
It'll give you a loan of up to 4% of my loan amount.
That is correct.
That I can use for my down payment, and that's interest free.
That is correct.
Wow.
A 0% interest, yeah.
And that's not even just first-time home buyers.
No. You could be a second time.
Do people just not know this?
I think most people don't know it. And so if you attend the class, you receive a certificate. And by the way, in the class, we cover all the loan programs. Then we have a realtor section. And in that realtor section, we also have an escrow agent come in, an insurance agent will speak briefly, an inspector. We try to cover as much as we can as far as information, so that when they leave out, I always tell them, when you come to the class, it's like you're going to be standing in front of a fire hydrant. All right?
Right.
So take what you can. Here's your folder.
Hey, how many days long is this class?
Oh, it's just a 1 day, 5-hour class.
Dang, that's a lot of information to jam.
Yeah, 5 hours we pack in there. I mean, just the lending section alone, we'll cover 2 to 2.5 hours. And we're actually having one tomorrow at my office location. And it's still not too late to sign up. You can contact me at 360-820-1787 and send me a text.
Okay.
And
is that the best way to get a hold of you, is a text message?
I would say a text, or you can go to my website, which is hendorthelendor.com.
You know what's funny is when I first met you, because I've known you for a few years now.
Quite a voice sometime.
Yeah, it was Hendor, and I was telling my wife that I met you because we'd had lunch together and we'd had some great conversations about our faith and the Lord. And I was like, hey, it's Hendor. He's a lender. And I was like, man, that's so kitschy, Hendor the lender. And I didn't even know that was how you branded yourself, which I think is it's just natural. It's a natural branding, HendorTheLendor.com. So
it's a way for people to remember my name.
Yeah.
Because
it all just flows.
It gets butchered.
Yeah.
It gets really butchered. So, but,
So 5-hour class, you take this. Now, are there other, just as a sneak peek? I mean, I think it would be worth if you're looking at buying a house, I think it would be worth taking that class just to be able to get a 4% of your loan amount interest free, which is, I mean, that's a huge benefit.
Yes.
But are there other programs for maybe first time home buyers that people don't really know about here in the state?
Well, I mean, you could do the typical 3% down payment program that they have available. Of course, the infamous FHA loan, 3.5% down payment program. Okay. So as far as mortgage programs, they all have their strengths and their weaknesses. And you have to see what's going to benefit, of course, the client and what's going to be the best program for them, But what the class does, it really prepares them to be able to make the right choices, Mm-hmm. And if I didn't mention, you do receive a certificate, which I did, but it's valid for 2 years.
Oh.
So it's valid for 2 years so that you can, 2 years later, you can come back and purchase a home and,
Yeah, well, and that makes a lot of sense as far as you think about getting your ducks in a row.
Mm-hmm.
I think a lot of times we put the cart before the horse in that
mm-hmm.
we'll go out, we'll find our dream house, and then we don't really know what the financial impacts of that house are. So I was thinking back, it's been a few years for me. We bought our home 24 years ago.
Mm-hmm.
And before we went looking, that's kind of what we had done. We had some good mentors in our lives that were financially savvy, and
mm-hmm.
They recommended us to do that. And so going out, a realtor is going to want to show you the biggest, nicest houses that they mm-hmm. think they can get you in.
Mm-hmm.
Most realtors, not all realtors, but a lot of realtors operate that way. And that was my experience when we were looking. But because we had taken the time to go in and go, okay, how much money can we afford to pay? What is this financially going to look like over the next few years for us? We had a really good idea of the amount of money we wanted to spend, so that way we weren't falling in love with a house that was going to put us, to the max mm-hmm. and stretch us too far. And I think that's a danger if you don't put your financial ducks in a row, if you get them in a row, if you don't cross your T's, dot your I's before you go house hunting,
mm-hmm.
if you don't already know what your loans are going to look like and whatnot, you could fall in love with a house, and then you're trying to figure out how to make this house work
mm-hmm.
rather than going, this is outside. We don't even want to look at that house. Let's
mm-hmm.
go find a house that works for us and fall in love with a house that is going to work for our family rather than trying to make the house we fell in love with work.
Mm-hmm.
So,
and it's usually a cycle. The first home is not going to be, in most cases, your dream home.
Right.
Okay.
For sure not.
And if you're a young family, you probably don't even want it to be your dream home, because once you start having those kids and what they do to the walls and the floors,
yep.
and it's probably not even the best choice. But the key is to just get into a home.
Right.
Now, with the market right now, with especially first-time home buyers, and because of interest rates, and because of home prices, right now most first-time home buyers need a cosigner. So in the past, if the husband and the wife, let's say, were working full time, we wouldn't have an issue. Okay, but now there is. Now we need that additional cosigner. Might be a parent, might be an uncle, might be a cousin, another family member, just to get you into the house. Okay,
and that's because of income limits and debt to income ratios.
Debt to income ratios, and just interest rates are gradually moving in the downward trend gradually, but nobody has a crystal ball. Nobody.
Right.
I've been in this industry for over 20 years. I've heard people say, well, interest rates are going to go down. Well, they didn't go down. Interest rates are going to go up. Well, they didn't go up. So, and when people always identify mortgage rates with the Fed rate, which the Fed rate is usually the rate that most people dictate mortgage rates. Now, they're kind of married to each other, but they don't really get along. You know, if I had a graph right in front of me, the trajectory, right? Mortgage rates usually follow Fed rates. So if the Fed rate's lower, mortgage rates, it'll take them maybe a couple of months or a few months to move in that trend also. They don't immediately get impacted because they're mortgage securities. They're traded on Wall Street, okay? They're not determined by the Federal Reserve. Right? They're determined by investors, okay?
Right, so it's just depending what people are willing to pay for that mortgage security.
Yeah, and if there's more investors, then mortgage rates will decrease. But, you know, I've told people this, if you want to have an idea what mortgage interest rates are, keep an eye on gas prices. And you will find historically, with gas prices and mortgage rates, they move in tandem.
So gas prices go up, mortgage rates go up.
Usually they do.
Seems like completely unrelated issues. Yeah,
I know. It's something. I heard that from an economist many years ago, and I questioned him, but he's right on. Look at gas prices now.
Yeah, they're up.
And look at mortgage rates now.
Yeah,
mortgage rates right now they're varying at 6 point, maybe depending on the type of borrower you are, they're varying 6.5 to 7.25. You know, and here's the thing: when people start shopping for rates, right? There's so many adjustments to the rate based on the person's credit score, of course, but also now based on their income. Okay, so we have what's called an area median income level here in Whatcom County, meaning that if you earn above that amount, you're going to get a worse interest rate rather than if you earned less of that amount. So right now, the area median income in Whatcom County is $102,600. So if you earn less than $102,600, you're a first-time home buyer, you will get the best interest rate.
That just seems like counterintuitive.
I'm just telling you, that's how it is. And because there's no loan level pricing adjustments, right? So I'm not going to get into too much, but basically if you have let's say if you earn over 102K, right? And you have a really good credit score and you're just going to put, let's say 5% down, you're going to pay a higher interest rate than someone that's going to put 5% down and earns less than 102,000 with the same credit score.
That's interesting. Well, that brings up another.
So when people see advertised rates, right? Oh, I could get this rate here. I'm like, well, you know, the devil's in the details.
Right.
So you have to call, find out more details. What's going on? You know, why is this rate being offered? You know,
so
what are the circumstances behind it?
Right. Well, and that kind of brings up my next question that I was thinking about here was, when somebody's shopping for a mortgage, right? They're shopping around. Typically, that's what they're asking is like, what is your 30-year fixed rate at, right? But that's one of them is like the rate that you quoted me. What is that based on? What are some of those questions that people often don't think about asking that they end up, because then by the time all of a sudden everything gets done, they're like, well, I thought I was going to get a 6.25 and I'm at 7.5. What happened? Right?
Yeah.
What are some of those things that they should be aware of when they're talking to mortgage brokers, when they're trying to decide who they're going to work with, and when they're actually trying to compare what my mortgage options are? What are some of those details that they should be aware of?
That's a good question, Andy. So besides the interest rate, you know, and again, asking them detailed questions as far as the interest rate you're quoting me, is that, and you will blow them away if you do call your loan officer or mortgage. By the way, there is a difference between a loan officer and a mortgage broker. Okay. And either way, it's to get you a mortgage. But and you ask them, is this an AMI rate? AMI is area median income interest rate.
Okay.
If you ask them, is this an AMI rate? Because, you know, I make more than $102,600.
Right. Which I'm assuming it's combined income, right?
Because what happens is, which I don't do this, and it's manipulative, is that they're going to quote you the best interest rate.
Right.
The best case scenario, because they just want to hook you in. And once they hook you in and they have your paperwork and they've ran your credit report, you feel like, yeah, the rate's higher, but
it would have been the same anywhere else.
Yeah. And they have you.
Right.
So it is deceptive.
Right.
So if you, when you call them first, you ask them, so what's your 30-year fixed rate? If you have an idea what your credit score is, mention your credit score. And then also ask them, is this an AMI interest rate? And it depends too if you're a first-time home buyer, right? Like I said before, the best interest rate is for a first-time home buyer, AMI, area median income below that threshold, you're going to get that best rate, okay?
Okay.
So, and then ask them, what is your origination flat fee? Or what is your commitment fee? Or what is your underwriting fee? Every lender has this type of fee, and they use this to cover their costs.
Right.
For the branch, for underwriting, for processing. Okay. That's fine. You can ask them for an estimate, but a loan officer or a mortgage broker can manipulate that estimate, because remember, it is an estimate. All right. It's not your official loan estimate, which is very different. And they could change the title insurance costs, the settlement closing fee costs, make it, shave off $100 here. So then you look at the bottom number, you think, oh, I'm only going to pay, let's say, hypothetically, $7,000 in closing costs, right? But really, it's going to be costing you $8,500 in closing costs. So the key is the interest rate, origination flat fee, commitment fee, or underwriting fee. What's your lender fee? So, specifically their fee, because they all have a fee. And that's how you compare apples to apples. Now, on a loan estimate, right? If they're able to issue you and you get a loan estimate, you look at the A category on the estimate. And on that A category, that's how you shop.
Is the A category going to be what's listing all of those fees and everything?
A category would just list that underwriting fee, that commitment fee, or the origination flat fee.
Okay.
Because all the other fees are third-party costs.
Right. Escrow fee is going to be the same no matter what mortgage.
Appraisal is appraisal.
Yeah. Appraisal is going to be the same no matter who I get my mortgage
and the small
through.
Other fees, difference $10, $15. It's not going to really, affect you that much.
Right.
So.
Well, and I would think too, like just in general, if you're looking around, like I tell people this about insurance all the time, like you need to find somebody that you can work with that you trust. And so I think it would be the same thing in mortgages, right? If you're looking around and you feel like, because you're talking to people and you ask those questions and then it comes kind of, you flush out like, oh man, there's some hidden stuff here. Even if the pricing is similar, or even if it was slightly better, if you found out like there's stuff that they were hiding from you and like they were trying to make it sound even better than it really was, somebody that you can trust is paramount. You're making probably one of, not maybe the biggest, but one of the bigger financial decisions in your life. And so you really have to work with somebody that you feel is going to be in your corner, right? Somebody who's not just there to make their commission or make their underwriting fee, but somebody who's there to guide you through a complicated process and is going to give you good advice.
And what people should see their loan officer or mortgage broker is more in the context of a relationship,
right? Because
they could help you build wealth. And what happens is that often people see it just as a transaction. Just like going through Starbucks, getting my latte, but it's not just a transaction. I mean, I've been fortunate and I've been able to help clients build $1 million real estate portfolios.
Right.
I had a client from Guatemala, didn't know how to speak English, came into my office, said, what do I need to do to buy a home? Okay, these are the steps you need to do. Many, many years ago. You might remember Horizon Bank in Bellingham when I used to work there. And he came back to me 6 months later. He says, Hendor, I did everything you told me to do. Okay. He had a small down payment, purchased his first home. I said to him, when you come back to me the next time, all right, let's use a down payment assistance program to buy another home.
Hmm.
Now, it took him a while. It took him like 15 years to get back to me. But he did come back to me. And he says, I'm ready to buy another home with my 2 other sons, and I want to rent the home that I own now. I said, good job. So we did that. We did down payment assistance program, bought another home, rented that home. He sold that home, right? This guy doesn't speak English. He just has a blue-collar job.
Mm-hmm.
He walked away with $180,000 in net equity.
Nice.
That changed his life. That changed his family's life.
Yeah.
And we haven't spoken again, but he always knows he has another option to continue that real estate wealth.
Right.
I have another client came from Venezuela, and he was blacklisted by Chavez because he was an engineer that worked in oil refineries. And he actually, we met. I mean, it was a God thing, you know. He found my business card at an open house, and we became good friends afterwards. And we have a lot of similarities because my family and I, we had to leave Cuba due to communism and political oppression, and so did he. So, he started with one home, and now he owns 3 homes. 3 homes, this guy.
Yeah.
And he has over $1 million portfolio.
Yeah.
In assets. So it's building that relationship. Why is that? Because whoever your loan officer or mortgage broker is, then they know you. You know, they most cases they're going to have your information available. So then when you're ready to move and make an offer, bang, right, you get your pre-approval letter. You already have that relationship in place. You know, they have your contact information, depending on what you prefer, you know, for them to keep. Okay. Right. But most lenders will have your information still on file in their system. And then you could go make that offer for the next home and build that real estate wealth.
Yeah, it makes it. I mean, it's so big. I mean, I know getting into it's always probably your first hurdle, and it's kind of like I was watching a thing the other day, and they were talking about building wealth. They said your first 100,000 is the hardest to make. You can, after you hit $100,000 of wealth, and it kind of makes sense because it's the rule of 72, which is how long does it take for your money to double? And so if you're trying to, when you're earning interest on, you know, 5,000, 10,000, 20,000, like that investment, as that's growing, it's growing much smaller. Once you to go from 900,000 to $1 million, you know, you have all $900,000 working for you to get you to that million. And so once you break that $100,000 of assets, then it becomes easier to multiply that faster. And it's the same thing in real estate, right? Like once you get your first home, it's going to become easier to get your second home. It's going to become easier to get your third home. We have customers that have 80, 90 rental properties. They all started with one, right? And so you see that and you go, wow, that's awesome to see what that does for their families in the long run, but it had to start with one. It had to start with that first-time home buyers class for 5 hours on a Saturday. That's right. To be able to understand what they needed to do to get into their first home. Yeah, yeah. So, as they say, right, a journey of 1,000 miles, or journey of 1,000,000 miles always start with the first step. And so I think that's so key. People get intimidated, but they get intimidated and quit before they even start versus taking that as, how often do you do those first-time home buyer classes? Because that might be a short turnaround, you know, for people to see how. But so, how often do you do those that people get involved?
Well, I do it once a month.
Oh, okay.
Yeah, once a month, and
so if they're interested, they get in touch with you. I'm assuming your contact information is on hendorthelender.com.
That's correct.
So that's probably going to be easier for people to remember than your phone number. So they could go online, they can look you up, get in touch with you, and get on the schedule for a Saturday. Like, I would highly recommend it. Just the idea of being able to use a interest-free loan for a down payment is that in and of itself can change what's available to you to purchase. So that's really cool. Anything else that you would recommend people to be thinking about if I'm getting ready to get into the housing market for the first time, going to do the home buyer class, but anything else that I should be really thinking about and prepping for?
I mean, an option that most people have not taken up is doing a renovation loan. So let's say they find a listing, and on the listing, on the remarks, the MLS remarks, it says cash only.
Mm-hmm.
Well, obviously because the house has some issues with it, but you could do a rehab loan. But you have to make sure that your loan officer is a renovation specialist, which I am.
Okay.
So because there's a lot more work to that. There's so much involved in the rehab loan, but that's an option. Whereas you can potentially buy a home, let's say, for $350,000 in Whatcom County, but it needs at least bare minimum, let's say $75,000, right, of work. Well, that's still quite cheap,
right,
for a home in Whatcom County for $425,000.
Right.
Again, it depends on the property, but you have to meet with someone who's a lot of mortgage brokers and loan officers don't do rehab loans because they are very difficult.
Okay.
They're painstaking. I mean, they are difficult and challenging.
That's where your gray hair came from, right?
Well, and plus 2 daughters. And so that's another option.
So we shouldn't just write it off just because it's a cash only. Maybe like Whatcom County, we had a big flood a couple of years ago. There's some houses out there that are still not done, and would be those rehab. Like, hey, they're gutted on the inside. You're not going to get a traditional loan for that.
Yeah.
So that would be the option to be maybe looking at that as a rehab.
Yeah, I mean, what I would suggest is, if someone is looking at that type of property and you have a relationship with the general contractor and they have an open house, let's say, well, set it up so that the general contractor can come with you to that open house so that he can see what needs to be done to the house. Right. He can give you an idea of what your budget's going to be. Is it going to be $100,000, $150,000? I just finished this one rehab loan, and it was really funny. The home inspector, after he did the initial home inspection, at the end of his notes, he said, "Good luck." He said, "Good luck on it." Oh. So, there was no way that this was going to pass, the standards in order to have it as a conventional mortgage or an FHA mortgage, and so they took the renovation loan option. And it's a great option to take, but you have to first have that, even if you schedule to see the house, I highly recommend that you take someone that has building experience to give you an idea what's it going to cost here.
Right. So just to kind of recap, make sure that I'm going to hit on the main things. So when I'm looking at getting into the real estate market, first thing I'm going to do or recommend to do is do that new home buyer course. Second, when I'm looking at mortgage brokers or loan officers, I want to not just look at the rate, but should be asking, is that what was it?
AMI. Is that an AMI interest rate?
Is that an AMI interest rate? What are the fees?
What's your lender fee? Your origination flat fee or commitment fee or underwriting fee?
Right.
Yeah.
And then I'm not going to be completely scared off by a house that needs rehab, because there are rehab loans available. It's going to be more work, but if the price is right on the house, that could help get me into something that maybe I couldn't afford to get into if it had already been rehabbed. So some key things to take away there. And then if I'm looking for that first time homebuyer class or looking for a good mortgage, are you a broker or a loan officer?
No, I'm a loan officer.
So if I'm looking for a good loan officer, I would go to HendorTheLender.com.
That is correct.
So, all right. So the last thing that I like to ask my guests when they come on if you could give a piece of advice to your grandchild, future grandchild, what would that be? Something that a key takeaway, like if there's one thing I want my kids to remember, I want my grandkids to know, my great grandkids, something that I could pass down, what would that be?
Is it mortgage related or it goes outside those boundaries?
Whatever the biggest thing is, the number one thing you want to be passed on for everyone to know, your legacy to your family, what would it be?
Yeah, I mean, the most important thing would be having a relationship with Jesus Christ. That's what's most important, because you're talking about eternity.
Mm-hmm. It's a long time.
Yeah, that is a very long time. And that's what's going to really have an impact in their lives. And that is the ultimate legacy to leave.
Right.
Yeah, ultimate legacy to leave. Empires rise, empires fall. But the cross has always held its place.
There you go. Amen. Well, I appreciate that. That's a great answer. All right. Well, thank you so much for joining me. I appreciate that. Appreciate our time together. Thank you guys for joining us. If you have any questions for me, you could always email me at theagentinsider@gmail.com. That's theagentinsider@gmail.com. Thanks so much. Until next time, have a great day.